If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream. Good morning, everybody. Welcome back. Happy Monday to you. Hope you're doing well. And hope you're ready for another trading week ahead. A little bit of craziness on the market open today, although could have been worse. Could have been. I'm actually kind of surprised. I put out a tweet yesterday saying, "What are the odds that you get some kind of walking it back right before the market open?" And I guess to be fair, the stock market open is still 1 hour away. So we have like a 1 hour potential period here where maybe you get some good news from the White House. But right now, as it stands, it does seem pretty evidently the case that the Middle East stuff is kind of back on. And this has been a crazy a series of events here, because what we've had is obviously back and forth in terms of a ceasefire or escalation. And so the market is kind of left picking up the pieces. It's like, okay, well, what does this mean here? And I'll tell you what it is being perceived as right now. Look at the 10-year. The 10-year holds the key here for a lot of reasons, because what we can see is that the 10-year yield is pressing higher here today. Now, what does that mean for our charts? If you watch gold, if you watch Nasdaq, if you watch the dollar index, how does this impact us? Well, here's the thing. Higher inflation, if we are going to see another breakout here, and it does look like we are potentially set to see one today, if you get a break higher in yields, where that creates problems is interest rates are then going to be more likely in the eyes of the market to be hiked later on this year. If we are starting over, think about this, guys. We're now in July, right? So we're halfway, more than halfway through the year. There is a possibility that if inflation rises, which is, by the way, inflation rising, the expectations for higher inflation are why this chart moves in the first place. So this is telling you in lockstep, the market thinks, okay, yeah, we're going to get some inflation because of this, right? So the situation here is that if this keeps rising, that's going to tell you that the bond market thinks the Fed's going to hike rates or they're going to hold them steady. I think we should actually take a second here to just look at what the bond market probabilities are looking like for rate hike later this year. So in the upcoming meeting, so we're currently sitting at 350 to 375. Really interesting that you're actually seeing here, guys, a 35% chance of a rate hike in the upcoming July meeting. That's 2 weeks away. I don't know, man. It's hard for me to say, like, yeah, I think the Fed's going to hike in 3 weeks, like, or 2 weeks or whatever. I don't see that as an impending. I would actually say this is, in my opinion, probably a little high, to be completely honest. But crazier things have happened. If we go out to the September meeting here, guys, what we're looking at is actually, in the eyes of the market, a rate hike is the expected outcome by September's meeting. Wow. Let's just get fun with it and look at October. You're looking at only a 21% chance that we have not hiked rates. And if we go out to December, you're talking about just a 13% chance that we have not hiked rates and a small chance that we have hiked interest rates 3 times. This is 3 rate cuts. This is one. I'm sorry, hikes. This is 1 hike. This is 2 hikes. This is 3 hikes. This is 4 hikes. So the expectation here is that we are going to see rate hikes. And a lot of people, man, a lot of people have been in the camp of thinking, no, that's ridiculous. The dollar's overbought. It's all going to reverse lower. And here it is, man. Like the thing is, I'm not positioned, like I'm not going to like say like, oh yeah, I was right here. But I've been talking about something on my channel here, not making the prediction. So I'm not trying to claim I called anything here. But I do think it's important to point out, like we have been discussing the very, very asymmetric kind of risk reward situation here with oil, in the sense that pretty much everyone is like, oh yeah, all things are clear in the Middle East. That's the way the market had been priced. And I can say that pretty confidently because look, we went to pre-war levels in oil prices. Pre-war levels. The war had not ended, and yet the price of oil, investors got really excited about it. And this is what markets tend to do. Markets tend to sometimes overdo things in either direction. So people freaked out, oh, we're going to $200 oil, and then boom, we came crashing all the way down to pre-war levels. And now the market's thinking, hold up, wait a second. We are not necessarily in the clear. Please don't spam the chat. It makes it hard for me to read people's messages. Gold could go to 4,000. I mean, gold could very easily go to 4,000. You're not that far away from 4,000 right now. 4,000 is the prior low. I think that if you're watching, oh, nice. We are live streaming on Facebook today. We've been having trouble getting lives to start on Facebook, but I believe we are live currently, which is great. If you're on Facebook, yes, we are live on Facebook. Very nice. And we've got, I don't know how to, we've got 2 viewers on Facebook. So if you're on Facebook, shout out. What's up, Ibrahim? Thank you for being here. Okay, so here's the thought process with gold for now. On the Sunday video, we discussed being open-minded and postured for either outcome this week. The big one that I had been discussing in my videos recently was CPI, which is still very important, but suddenly becomes kind of secondhand to what's going on in the Middle East. Facebook is dead. You know, some would think so, but my page posts over there have actually been doing really well, at least for my stuff. Maybe there's a lot of Facebook traders. I don't know. But anyways, if we're looking at gold from a technical perspective, we still have the downtrend being respected here. Like, let's pay credit where it's due. The bears are still in control of this chart. If we are looking at the daily 4-hour timeline, like if you're a bull looking at the daily chart, this is tough, right? This is a tough thing to be buying. If you are short-term in nature, if you are looking for a breakout, this has been a painful, defeating looking chart to be a bull in, right? So bulls, you know, have had it rough because every time you get something going here, sellers very decisively take back levels of resistance almost every time. So for the bulls to get something going on the daily chart, I think you need to see that nature change. What I mean by that is, I think it's probably, I think you're better off, in my opinion, I'm better off waiting for a breakout and decisive change in that nature, this lower high, failure every rally. I'm better off waiting for that to change in nature before any longs are even a possibility. I have not taken any longs in any of this gold move. I've had people, saying like, Nick, you got bullish. I have not been bullish on gold because I have no positions open on gold. People have been saying like, Nick, you have been bullish and bearish and bullish and bearish because my headlines are chaotic. That is true. I've got to play the YouTube algorithm game like everybody else to get people to watch my content. It's just, unfortunately, the way these algorithms work, you have to create exciting titles or thumbnails or your videos get buried to the bottom of YouTube. So understand there's a little bit of excitement in my titles and thumbnails, but if you've actually been watching, I have no position on gold, but I'm very open-minded to scenarios that could take place this week. This week is a huge one because we have the CPI report tomorrow. And today we are now grappling with the reality that Middle East is still going on. That is not done. And it seems to be potentially escalating for kind of a round two. So from a technical perspective, if you're a bear today, intraday bears are probably watching levels like 4,060 where we currently sit to see, do you punch through the lows here in New York, the New York session here starting? And if so, any sort of rally could potentially get faded and make that move back down to 4,000 or even the lows around 39.80. What's your name on Facebook? It is TraderNick. There's a lot of fake accounts. I am live streaming on my page right now, so please be careful that you are finding the right one. But yes, I have a Facebook page. So if you're a Facebook person, find me over there. So let's see. So when we look at gold, the level today that's being tested right now is actually a big deal because if you break this, I think intraday bears could actually see this thing make a push on down to 4,000. If not today, maybe in the coming days. If the Strait of Hormuz stuff is no longer a thing we can kind of hang our hat on and be like, hey, yeah, that's mostly done. We shouldn't worry about that. I mean, look, oil price is up 4%. That's not nothing. And what my concern would be, if you're very bullish on precious metals or for stocks for that matter, I mean, both stocks and gold are down today, kind of a throwback to the last few months, right? Notice something happening here. Oil's up 4%. It's holding its gains. I think all eyes should be back on oil today because if you trade gold, if you trade NAS, this chart matters a lot because if oil continues to hold a bid here, if we start breaking through highs, higher lows, higher highs, if that narrative in oil is back, look out below for gold, look out below for Nasdaq, right? Those things are going to take on some water, in my view, if you continue to see oil press the high side. Because again, we are now seeing probabilities for interest rate hikes rising. So I think this is my personal opinion going into the week. I'm cautious on stocks. I think they have room to potentially come down. Look at this, guys. Here's a little nugget for you. This is the Korean stock market. The Korean stock market was down 9% on the day. What? That's crazy, right? That's a big stock market getting nailed 9% in one day. What's going on? Well, this is a very memory heavy chip manufacturing, tech trade stock market. You know, Korea is big on the semiconductor tech trade. It's also very leveraged. There's a lot of speculation going on and a lot of froth in the AI stuff. Granted, let's be fair to the Korean stock market. This is only coming back to May's numbers, right? This is not like, however, if you were long at the top, this is a painful drawdown already. 27%. That is no joke in a stock market index. Now, I show you this because this is what tech can do when tech has challenges, and higher global interest rates, oil price shocks are enough to derail, if persistent, margin heavy trades like being long a bunch of semiconductors. I mean, this is a margined trade. Don't get it twisted, right? You look at semiconductors here in the US, that can happen here too. You can have semis down 5% on the day. That is certainly a possibility. So I look at the semiconductor trade and I want to be a buyer, but I also want to see a pullback. And when that pullback happens, again, look at the Korean stock market here. Again, very tech heavy, indestructible, monster performer stock market. That is what the downside can look like. It can look violent. It can look very quick. It can be painful. So if you are leveraged long, I mean, this is for sure, unfortunately, destroying a lot of people who were leveraged long. And so we look at these scenarios and we say, okay, let's posture and be ready for those sorts of scenarios in a potential move in the Nasdaq. I think it's less likely that you get such a stark, kind of downside move in Nasdaq, but it could certainly happen, right? So I'm kind of cautious on stocks at this time. If oil's going to go on a run here, and I am curious, I don't think oil, oil's still kind of neutral on Edge Finder. So we'll keep that in the back pocket. By the way, for Edge Finder users, I expanded the Edge Finder score over time. It now looks back 45 days here. I also made this indicator bigger on the screen. I don't know for Edge Finder viewers, if you're a user of Edge Finder, if you use this feature, but I love using this, and I wanted a little bit more of this histogram to be visible, a little bit more history. There is, of course, you can go look at the historical score and go way back, over a year and a half or whatever, but just wanted to make that a little bit more easy to use. Anyways, when we are looking at some ideas for this week, let's get into some of that. So gold getting a +1. So we are still very neutral on gold. Look at how extreme this thing was. It was super bearish in going back as far as, June 1st, which we had a really wonderful sell-off in gold with scores descending. I mean, that is just picture perfect. And then it started to reverse. Early July, we started getting the idea of like, okay, maybe gold is losing some of that synergy. I'm open-minded this week because this week, tomorrow, guys, we have the consumer price index number, and that number matters significantly for my friends watching gold and oil and stocks and currencies, because if we have inflation spiking tomorrow in combination with oil prices, which is a kind of a forward indicator of inflation in a lot of times, if this thing keeps breaking highs, again, I think gold probably sees fresh lows in the short term. I don't have enough conviction to short it myself. I'll say that because, again, fundamentals slightly bearish, but we've had some metrics like soft jobs print. That's bullish for gold, right? So there's some bullish and bearish factors here. But this week, I'm very open-minded to a potential shift in score either direction. I could end this week long or short gold, and I'm perfectly comfortable with that reality. So I'm just going to watch and wait and stay nimble here. And a lot of it is to do with, what happens with interest rates this year, the dollar this week, the dollar this week, etc. So dollar index, if we're taking a look at the daily chart, still looks really strong here. You're kind of consolidating, but still sitting around a support level and upward trend. So again, if you get the geopolitical pop and or higher CPI, I'll say like one of the more clear signals this week would be a really hot CPI print over expectations. If CPI comes in very hot, the dollar index probably makes that run back up to the highs. And then I think we're flirting with the idea of a breakout past the 102 mark. So I'm very much potentially willing to get back into gold shorts if CPI is very hot. And I'm also possibly willing to look at the long side if we get de-escalation, lower yields, softer dollar on a softer CPI print. So, people in my videos yesterday, I had some comments who were upset with me. So they said, Nick, so you're saying it could be bullish, it could be bearish, and you didn't give a decisive outlook. And that is correct. Like, I'm not going to sugarcoat it right now. I think it's okay. And there are times to be neutral and in a ready position rather than always got to be, oh, gold's going to tank, gold's going to rally. Like, there are times to sit and wait and watch. And right now, I think that is the time for gold here. So I look at gold and I say, okay, if CPI is hot or CPI is cold, that gives me a much stronger reading. There's always someone upset in the comments. It's so true. I can say anything and there will be people who are like, nope, you're wrong, you're an idiot. And it's like, okay, you trade your system, I'll trade mine, and cheers to you. Anyways, Nasdaq, S&P, all that opens up here in about 45 minutes. So I'm curious to see how that opens up, because And I also want to clarify here, if I would love gold to flush the lows, because from a long-term perspective, I think this is kind of a hot take. I think the Iran war is being taken as a negative for gold in the short term. But I think that if we see a bunch of interest rate hikes and inflation spikes, I actually think that in the longer term, that produces a really nice buy opportunity in gold, in my personal opinion, not financial advice. Okay. So what I mean by that is if you get interest rate hikes, you get inflation rising, and you see gold flush down into the mid 3000s, if that happens, I'm probably going to scoop up some gold for the long term, not with any leverage, not with a tight stop loss, but just holding it in my portfolio. The reason for that is because if we get high interest rates, high inflation, et cetera, I think that it actually could hurt the economy pretty bad. And if that takes place, then I think the follow through move after that would be to lower interest rates to try and save a weakening jobs market and to print a bunch of money, which would be bullish gold. So I think if you get a very sharp drop in gold, it's a buyable dip in my personal opinion for my own personal trading. You do whatever you want, but I'm just sharing what I'm thinking here. So I would love that, to be completely honest. Like if that happens, I would feel really happy with that because again, you've had such a monster. I know gold does not feel like it's been in a monster uptrend, but for those of you who have been looking at gold past just starting of 2026, you know as well as I do, gold has been absolutely skyrocketing for years on years. And so to have this pullback, I think long term is actually a blessing in disguise. So if you give me that dip down into the mid 3000s, I love the idea of starting a long-term dollar cost averaging position. And to be honest, I might start it sooner than that if we get, like I'd be open-minded to like buying a little here, buying a little here, buying a little here. And I'm not talking about a short-term trade. Those are like long-term positions that I'd feel very comfortable sitting in. I mean, granted, guys, we're already down 27% off the highs. I'm not opposed to shorting in the short term if I get the right signal in the next couple of days. Like I could short the sell-off down to those levels. But I think you could get a nice longer term buy the dip opportunity. I also want to address something else. I've seen some people saying that 30% drop in gold is pretty much an easy buy and it's going to go up from there. Not necessarily. Let me burst your bubble politely and with respect. Gold can have really nasty drawdowns, just like stocks. Look at this, 70%. Okay. Did that one humble you? I mean, that one by itself humbles me. 45%. Right. So you can have melt ups that end with nasty drawdowns. Do you know what a 70% drawdown would look like? It would look like 1750 gold. Do I think that's happening? I personally do not think it's going to happen. I could be wrong though. And that's the difference. Again, you have to acknowledge we could all be wrong. So understand, could that happen? Yes. Anything can happen in markets. Markets love to maximize pain for certain, individuals, and that is how markets thrive. They take money from people, right? So anyways, same with the stock market, right? Stock markets have been doing phenomenal for a long time, like unbelievable returns for stocks. You have a little bit of downside here coming. This one too is not indestructible to larger scale drawdowns that could come our way. I mean, that's a 37% drop in 2022. Again, a lot of people forget that markets, if you've been long stocks, you've done incredible, right? But if you forget history, then you'll be blindsided by what you think is impossible. It is not impossible for stocks to drop 40%. They could do it. I'm not necessarily betting that they will. I'm just saying, like, be open-minded. This is why leverage and margin get people into a lot of trouble, guys, because people believe that, I mean, there are people right now, and again, I'm not trying to poke fun at anybody. If this is you, my sympathies to you. Trading is really hard. It's brutal. Markets have no soul. I heard someone say that yesterday. I thought that was a good line. But here's the thing, right? There's people who are leveraged long tech stocks in Korea, 27.5%. A lot of people probably blew everything on that move, right? Because they thought, yeah, that's not going to happen. It can't happen. And these moves can be violent. So please be careful. Everything can move way more violently than you think. With that said, path of least resistance for me right now, Iran war back on. Inflation's been a little tricky. It's been a little higher than expected. I could see gold moving back down, but I do not have enough conviction to be short gold at this moment. I've discussed that at length in the videos. I'm sitting neutral in gold at this moment. But again, as I've been discussing, a hot CPI print, a strengthening of a bearish read within my fundamental metrics. Let's say, for example, economic growth strengthens up. That would be bearish for gold, right? A stronger dollar, a breakout in the dollar, that would be very bearish, confirming for our gold bias here. So I'm open-minded this week. I said this earlier, I'll say it again. I could very well end the week long or short on gold, and I'm perfectly comfortable sitting there and waiting for it, right? COT data, let's take a look at what institutions have been doing. They bought some dollar, which I thought was interesting. They bought treasuries, which actually kind of surprises me. Did they? Oh, well, actually, let me clarify. They added both long and short positioning, but because institutions are already so short, that gets weighted as more of a net bullish tilt. Nasdaq, they added a lot of longs on Nasdaq. What about gold? Gold, they added longs, added shorts, kind of a neutral week over week change in terms of absolute changes in contracts by institutions. However, on a net basis, they changed more bearish because they have been very bullish. They just kind of reduced that percentage exposure overall. Let's see. Oil. Institutions actually reduced bullish exposure. They reduced longs and they increased shorts on oil. So that is interesting. So yeah, Japanese yen, they also, look at this, decreased short contracts significantly in the yen, which is interesting to me because look at what's been going on for my currency friends out there. Yen's been an interesting one. Dollar yen has been breaking through highs, right? You had a big drop, but institutions seem to have reduced yen short exposure. Actually, did I read that right? Am I saying that right? Hold on. Japanese yen. Yes, they reduced short yen exposure, which is interesting. So if yen more bullish, maybe they're thinking this is not going to extend much further. Interesting. Very interesting. Last week, we also saw some interesting moves in, look at this. This is so perfectly timed. SPX saw a huge surge in call volume on a proportion basis, looking at the put call ratio on Friday. So on Friday, we saw puts get hit hard. So what I mean by that is a lot of people bought puts. I'm sorry, I'm saying that wrong. On Friday, a lot of people bought calls, sending the put call ratio much lower, signaling that crowd sentiment on Friday's trading action was very bullish. So crowd sentiment got bullish on Friday for the S&P. And here we go. We got a little bit of downside here today. I'm wondering also, was that the same on the Nasdaq? Nasdaq, not so much, kind of mixed sentiment here. We'll take a look at gold as well. Gold sentiment is kind of neutral. You were getting a lot of bearish sentiment from the crowd, and then it flipped. Let's take a look at some options flow here. So we're looking at, I like this indicator because what it does is it takes into consideration volume. And so it looks at call volume versus put volume over time. So we can look at, for example, gold. And this one has shifted from a lot of people rushing the call side to now kind of a neutral stance, neither sharply in either direction. Let's just look around here a little bit. Dow Jones. What about Bitcoin? Bitcoin, a lot of bullish sentiment coming into Bitcoin. Also not a great timing here in the sense that, this is painful. Look at this. You guys ready for this? So look at this. On Friday's trading action, Friday is, where are we at? Oh my gosh, this is rough. Yeah, this is painful. So a lot of people bought calls on Friday. This is Friday. Okay. So we can see crowd sentiment. And this happens so often, guys. Crowd sentiment jumping in on bullish Bitcoin theories. And here on Monday, all those call buys look rough, right? If you were like betting the breakout here in Bitcoin to the upside, this looks rough today, because now you're down all weekend. You're down, 2+. I mean, I guess that's not terrible for Bitcoin, to be honest. Bitcoin likes to move like 8% in a week or something like that. But anyways, a lot of call volume, poorly timed here. And that is so often the case. That's why I love looking at this tool, because I can kind of get an idea of like when everyone's rushing one side of the trade, a lot of times it's a really nice opportunity to either fade. Well, really, I like to use it as a contrarian indicator when it gets really extreme, in combination with other things that I'm looking at. So we do also have some really cool tools coming you guys' way. We've been building some call and put wall stuff, which is courtesy of my friend Chris Pulver. We're going to be building some of that stuff, which is incredibly cool and powerful stuff. So stay tuned on that. Here's a look at the dollar. Dollar sentiment started to get real bearish here. Now it's shifting a little bit more neutral. So we'll keep a close eye on that. And really curious with, look at this. In this case, crowd sentiment might have been right. Huge surge in call volume here on oil contracts. And again, I think that's the market to watch today. I think if you're watching one market today, you probably want to watch crude, because if you get this break, solid close above like 75 today, that looks really strong for the re-escalation trade, I guess. So we'll see. July is still green for the month. Bitcoin still hopeful. Yeah, we'll see. Bitcoin it's been a challenged one. It's been a rough year for Bitcoin. Maybe the turnaround is coming. I just don't know when. For me personally, I just think that that's just a tough chart. I don't like investing personally in crypto. I'm not saying necessarily I think it's a useless thing. I've ranted about this a bunch of times. Long story short, Bitcoin has never been in a true recession. It's been down 85% during since inception several times. All of that took place in a relatively hospitable, fertile crescent market environment of the last 10, 15 years. I don't know what happens in a 2008 type environment or a 2001 type environment. So I have no interest in investing in Bitcoin, because if 85% happens in good times, what happens to Bitcoin in bad times, right? And again, some people say, well, yeah, but we had 2022. That was a really dark period, but that's still nothing compared to 2008. Like, this is 2008. The stock market, the diversified, all the best companies in the world dropped 50+%, right? Bitcoin has never lived through something like that. 2022 is maybe like the worst period as a very mature asset to an extent that Bitcoin has experienced, and that was like 27.5. Imagine doubling plus that. And I just don't know what happens to Bitcoin in that environment. Again, I'm not a bear per se. Like, I don't have a strong opinion. I'm not bullish or bearish on it long term. I'm just like, I'd rather own stocks. I'd rather own companies, something that yields tangible real world value. Bitcoin is a fun thing to trade. I think it's a great trading vehicle. It has a lot of volatility, but I'm just not a Bitcoin hodler. I would prefer, if I had 100 grand, I'd rather put it in commodities, stocks, real estate stuff, rather than crypto. Yes, maybe crypto way outperforms. Maybe it does, but maybe it doesn't. Maybe it goes to zero. I don't know. It's possible. Anything is. Markets love to shock people. So anyways, guys, in just a second, we're going to pass the show over to our next show host. Mr. James Lane's taking over the stream for a little bit to talk markets and trading setups. Just a quick reminder, if you are not using Edgefinder and are interested in getting a copy, now is a great chance to do so, because we have our summer sale going on right now. If you scan the QR code on the screen, you can explore the discounts that we're currently offering. And I'll drop a link here in the live stream chat to where you can actually direct message our team if you are interested in setting up a payment plan, extra discounts. And also, here's a quick plug as well. We have people who are all around the world. Some people recognize, or we recognize, that the dollar is sometimes very expensive for certain people. due to the exchange rate changing. Dollar's been up a little bit. So we've been making accommodations for people who are in places where the dollar is more expensive. So if you need to set up a payment plan, extra discounts, etc., let us know your situation. Just chat in. Our team is happy to help. We have real people on our staff who can answer questions about the product, set up a payment plan that fits your budget, etc. They're wonderful to work with. So just message them using the link that just got dropped in the live stream chat. Or if it's easier, if you're watching on like Facebook or Twitter or something, you can also just punch in a1trading.com and then chat with us in the bottom right hand. There's a chat widget there that you can speak to someone from our team. With that said, guys, we have got Mr. James Lane talking trade setups here in just a moment after this quick break. Let me go ahead and roll that now. Stay tuned. We'll be right back. This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Hello, ladies and gentlemen. Happy Monday. Hope you all enjoyed your weekends. Hope everyone's doing well. So on my side of the market, there's no updates at all. So I'm still sat in the Dow long position that I showed you last week. There's been absolutely no development here. Very, very flat. And the gold short position is still open. As I've said, I'm personally not in this. I was stopped out for break even, annoyingly, because I slightly had a lower entry than the one marked up here. But for my team, it is still open, technically speaking. But other than that, completely empty portfolio, again, other than the Dow long position. Simo, hello. Jeremy, good to see you. Simo, hello. Love from Philippines. Love from the UK, Paul. Sluggy, good to see you. Tony, hello. Wow, there's lots of you in here today. Good to see. So what are we looking at this week? Well, we've got CPI tomorrow. We did discuss this last week. I'm not sure if Nick spoke about it with you. I came in a bit late, but we'll probably discuss CPI tomorrow as well. So I'm not going to go into that too much today, but we are expecting slightly lower CPI actually, which will be interesting. Actually, hold on, let me pull the edge finder over. Forgot I didn't have that on screen. So we'll quickly go over it, but again, we'll not do too much detail today. So we've had the labor market weakening with ADP and NFP underperforming. NFP about 50% undershoot here. Growth is doing quite well. Actual came out at 2.1. Forecast was 1.6 and previous was 0.5. So growth is still looking very healthy. The PMIs, manufacturing and services, are still good. You know, they're definitely not crumbling, but they did undershoot their forecasts. And the inflation readings here, CPI, PPI, and PCE, all pretty sticky, slightly heating up. You know, actual compared to previouses, we can see that they have been coming to the upside. But again, tomorrow we are expecting slightly cooler CPI, especially year on year. I think we're expecting about 3.8. So if we've already had weaker labor data and we see inflation cooling off, there is potential for things like dollar weakness, gold longs, silver longs, maybe. Of course, that is a little bit of a shot in the dark because we are seeing the escalations picking up again in the Middle East. So inflation could persist much longer than what the markets might be expecting. So again, we'll kind of just leave it there. But it is something obviously you need to be aware of as we go into this week. Could be a 3.8. Yes, exactly. GU short. I'm going to be honest, and I hate to say this because it was a large part of my segments last week as well, but there's nothing I can really say on the dollar until I see tomorrow's print. Luckily, it's only today that I have to stay on the sidelines or on the maybe not type of sideline, if that makes sense. So actually, let's just see. The Edge Finder was bullish on pound dollar. I'm not sure if it's still there. Let me just double check. It is. So fundamentally speaking, it's still not very bullish. It's still bullish with a score of 5. So it's fine, but it's definitely not the top trade idea. So as far as I'm concerned, the only approach as of right now, the way things stand, obviously not accounting for the maybe not tomorrow with CPI, fib from the low to the high, a little bit discretionary. There is obviously an argument to draw the fib from these lows here, which actually would have worked out. However, as far as I'm concerned, I would draw it down here just to allow a bit more room for price movements. So fib from the low to the high, we've got the sort of established bullish trend that's just formed here with the moving averages. So I'd be looking for a retracement back into sort of the fib zone and retesting the support level here. So something like this I think is very straightforward. However, if we don't get that, and actually this is what plays out, again, I'm not really looking at this, so I don't want to sit here and take both sides of the same trade idea, if that makes sense. I'm not sure if that's the right wording, but if this is sort of what we're going to get, this is the extent of the pullback into this fib level, we could see a break of the previous resistance, retest, and then a continuation. So in that case, if I don't get in the trade and this is the play out, then I would have to look for this retest and get in on a rejection of that. So that's my current view on pound dollar. However, again, I want to reiterate the CPI situation tomorrow, because I think the markets were obviously quite aggressively pricing in the hawkish Fed during this period, and now we're kind of sat in this minor downtrend, not a significant downtrend by any means, but obviously on the back of the weaker labor data and the less than hawkish comments by the Fed. We have seen a little bit of pressure on the dollar. We do still have war premium, obviously, with the Middle East. So if we do get CPI coming out hotter, I would expect the dollar to continue higher as we do see market participants continue to price in hikes and that probability increases. However, cooler CPI, I would expect us to start reverting back towards 99.8 and sort of correcting the impulsive imbalance, FVG, whatever you guys want to call this sort of aggressive candle here. That's kind of my two situations right now. So with the dollar specifically, I'm not picking a direction until we get data, is what I'm trying to say. The New Zealand dollar, however, in my video yesterday, I always do a Sunday watch list video, and I completely missed the New Zealand dollar. I kind of completely overlooked the strength that it's having at the moment due to the hawkish RBNZ. So there is an idea of trading New Zealand dollar to the long side, and one of the markets I really like right now is Euro New Zealand to the short side. I'm not in anything yet, but I'm looking really for a retest of this previous structure. We've had the beginning of a trend change here on the H4, so I'd be looking for a retest into this level and then a rejection and continuation lower. The RSI is also pretty oversold, just a little bit of a sign that we might have a bit of a pullback here. So fib from the high to where the market is now, let's assume this is the low, or this is where the low printed. The 61.8 to the 50% fib retracement lines up pretty nicely with this level of structure as well, just giving us a bit more confluence into that level. So Euro New Zealand's definitely on the list, but there's nothing I can do just yet. I need to wait for that pullback. Let me just catch up on what you were saying. Australian dollar selling across the board. Yes. Credit Agricole is currently short the Aussie New Zealand again. This was... I'm not sure if I updated you. We were in long Aussie New Zealand. That got completely wiped out on the RBNZ hike. So that was unfortunate last week. I'm not sure if I mentioned that or not. But yeah, Credit Agricole are back short Aussie New Zealand, which is a little bit frustrating because I was short maybe a month ago. I'm not too sure. Some of you will remember when I was on my short crusade and I gave up at break even. In hindsight, that might have been a terrible idea, but we're looking really at a sort of mean reversion idea of the bullish leg or the bullish rally that we saw in Aussie New Zealand, or the Australian dollar in general, actually earlier in the year, due to the hawkish RBA and the hikes that they were doing. Once price got into this level, and we saw the Australian dollar economic indicators start to sort of weaken quite significantly, especially compared to what they were, I was quite happy sitting in shorts. But yeah, as I said, I gave up because it was just not doing anything. Sideways price action was a little bit of a warning sign to me. So gave up on that break even, which again, in hindsight, probably a bad idea, but what can you do? So the Australian dollar, I don't really have anything specifically for it at the moment. I do think it's lost a lot of its advantage that we have seen, obviously. So unwinds as soon as we get a new dominant currency is bound to happen. So if the US dollar does continue to rally higher, I would expect weakness within the Australian dollar as a sort of beneficiary or negative beneficiary. But yeah, I think focus really at the moment, New Zealand dollar strength and US dollar potential strength or potential weakness. Again, it depends on data as far as I'm concerned. I'm sure gold will go up or down tomorrow. Yeah, I'm sure it will move as one direction or the other. As long as it doesn't start moving backwards, I think we're all right. that would be a bit of a concern. Escalation before RBNZ meeting minutes was supposed to help New Zealand dollar bulls. Oh wait, hold on, I missed a message. Anyway, that's not my conversation. German 30 buy. Maybe there is an idea. Oh, sorry, I'm not sure if you guys heard that. I'm not sure how sensitive this mic is. Sometimes it picks up everything, other times it doesn't pick up anything. But I just knocked it, so that might be annoying for you guys. Anyway, the DAX, we were talking about the DAX, and actually, 500 IQ James coming into play here. We were discussing at this point buying off this 200 moving average, just looking for another bounce. If we did that, we would have been sitting quite nicely in profit. Obviously, I didn't, unfortunately, because that's not the way I actually trade. But from a purely technical and momentum approach, it looked pretty good. So based on that, I think it's still valid. Again, purely on a technical side. On fundamentals, I don't really see anything. We've got no edge finder reading for the DAX at all. Well, when I say no reading at all, I obviously mean bullish and bearish readings. So what do we have? I'll tell you what, I'll just type it in. Yeah, we've got a score of 1 later, a massive score of 1 here. So fundamentally speaking, it's completely flat. So yeah, if I had to pick a side, I would say buy. Not signal, by the way, not financial advice, but my personal bias would be to the long side, following the trend and the natural drift of the indices and indexes. But again, from a more holistic view, including fundamentals, there is nothing there. Aussie New Zealand's to trade. Yeah, I might have to jump back in. Also, my YouTube link has been dropped in the chat. It would mean a lot to me if you're enjoying my segments and you're not already subscribed. If you could, I'm at 4,600. Just reached it. My mission is to get to 5,000 by the end of the year. I'm averaging about 100 subscribers a month. So if I carry on that track, then we'll get there. But we'll see. But that would be greatly appreciated. Aussie CAD shorts looking good to trend. Let's see. Again, I'm not really in any oh, sorry, that's not the right word. I don't really have a bias for the Australian dollar. Canadian dollar, however, I do sit a little bit bearish. That again could change depending on headlines that we're getting out, but the markets just don't seem to care about the headlines that we're getting regarding Iran, especially on oil. In fact, the market is all over. All the markets, like gold, oil, we're just not seeing any real reaction. We're seeing a little bit of upside, but definitely not what it was. When we first got the headlines coming in. Oops, hold on. We got the gap up and just a massive rally to the upside, and then we've got re-escalations and we've seen really nothing. So regarding the Canadian dollar, I wouldn't really be banking on the Iran situation to bolster oil, in proxy also bolstering the Canadian dollar. So I think really looking to buy into this bullish trend might be the easiest way to go. But again, on a fundamental side, I'm not really seeing that much to warrant that idea. Pound yen, unfortunately, I missed this trade yet again. So again, if you, I keep saying again, I need to stop doing that. It's a bit of a tick, I think. Where is it? Pound yen. Yes. So some of you will remember I was talking about pound yen, looking for a rejection off this level, completely missed it due to my own hesitation. And then the next opportunity I was looking at was obviously draw the fib from the new low to the high, looking for a pullback into the 50% retracement into this bullish trend. And I didn't take it because I wasn't at the charts at this time. This was, I think, during the middle of the night for me. So unfortunately, yet again, I'm sat on the sidelines of pound yen just watching it. So what can we do? Hey James, I am cooked on dollar yen shorts. Oh man, what are you doing? What are you doing in dollar yen shorts? Yeah, so this is the trap. Excuse me. This is the trap we've been discussing on dollar yen. And I understand why people are falling into it. It's difficult for me to speak on because I also got trapped in dollar yen shorts here, looking for the intervention, like we've had previously. I think that was a very valid trade. It was essentially just a 50-50 bet. Will they intervene? Will they not? I was willing to take that risk. It's fine. The problem is up here, we don't have the historical proof that they do want to intervene at 162.5 or 163. Likely, I would say it's quite probable, but there's obviously still no guarantee. So what you don't want to do is sit there. So, up here, the MOF's going to intervene. We're above 160, or here they're going to intervene, or here they're going to intervene. And then you get caught in this chop or even the uptrend. And eventually, that will happen, I would imagine. But then by the time it does happen, you've actually already taken, 5, 10, 15 losses maybe. And now you've been taken out of the market and you actually missed them if you were trying to catch. So I would personally say it's not worth shorting dollar yen. I think the best idea, if you're wanting to benefit from an intervention, the best idea is not necessarily to try and short. It's actually to wait for it to happen. Obviously, then you've got the proof and then actually just buy it lower. Because then it's not just a case that obviously you've caught the intervention, but then if you're sat short, you're also collecting negative swaps. Whereas if you buy the dip, obviously, it depends where and how you manage the trade, so on and so on. But I'm kind of talking about the perfect world. Let's say you bought it down here at the 200 moving average, like what has happened previously. You would not just catch a really nice trend to the upside, but you're also then in a really nice carry trade that pays you to just sit and do nothing. So I think that's the approach that I would say is best based on my my personal approach. But of course, it depends on how you trade. Yay or nay? Yes, so that is a nay in my opinion. DAX is flat. Yeah, DAX is flat. Dropout kit. I'm not sure what you're talking about. I don't know what that's referring to. Pound yen. Yes, I would still say pound yen is a good buy. I mean, it's bullish on the edge, finally with a score of 8. The fundamental side is looking fantastic. The trend is there. It's a beautiful market actually. The price action that we're seeing on pound yen, especially for the way I trade, pullbacks, fib levels, it's almost perfect. But again, the problem for me is actually trying to get in. I just keep missing my entries, which is my own fault, my own problem. But yeah, I would still say it's bullish and looking to buy is probably the best way to go. Not financial advice, as always. Could I specify my EMA settings currently using? Yes. So these are all, EMAs, not SMAs or anything like that. So I use EMAs only. I use a 200, a 100, and a 50, and that's it. I only use them really for trend identification. I don't really trade moving average bounces. Although moving average bounces on higher time frames like the daily and weekly do actually work quite well, especially if you use a 200 moving average. It's quite accurate. But yeah, they're best really just to get a very quick and easy gauge on where the trend is and what the state of the market is. So if they're fanned out like this, very clearly it's a nice uptrend, we can look to buy it. It's one of those objective things. You could do the same with for example, drawing higher highs and higher lows or trend lines. But the problem is with those, they're quite discretional and you can get lower highs even within still an uptrend. In my opinion, again, it depends how you define an uptrend exactly. But for me, it's just, again, a very quick and easy way to identify the market regime, if you will. Euro Aussie buy. Good question. Let's have a look. Actually, give me a second. Let me just make sure I understand my time here. So Alan Perez coming on 8 minutes. Fantastic. Okay. So Euro Aussie. While we were looking to buy, I'm guessing it's a good thing we didn't do that. So let's go back to the Edge Finder. Euro is getting a bullish reading. The Australian dollar against the pound is getting a bearish reading. However, Euro CAD's bearish as well. Euro pound's also bearish. Okay, let's see exactly what's going on here. Be good if I could type properly. -2, so no direction in my opinion. The problem is, so we've got a slightly more bearish lean on the fundamentals, but the technicals here on the H4 are actually quite bullish. So in this case, because I'm getting conflicting signals, again, the technicals are telling me to buy, the fundamentals are telling me to either sell or stay away, actually. So I can't really do anything here. So yeah, for me, it would require something else change. So either the job market's changing bearish or inflation changing bearish, something to just drive this Euro-Aussie score more bearish. But yeah, for now, I'm sat with nothing here. When we can close, someone should help me. Gift, what do you mean by that? When can we close? Close what? I'm assuming you're in a trade that you don't like, but I'd need a bit more information before I answer that question. 162 to 163 ascending USD JPY. Yeah, I think the problem is, and actually, I think Nick said it quite well. I'm not sure if it was in one of his streams or one of his videos. I'm not 100% sure, but I think he was talking about the same thing or something very similar. When something becomes very obvious, so like, you know, how I was shorting dollar yen at 160, expecting the same thing to happen. I think a lot of people were doing basically that idea. There were a lot of short positions going into dollar yen, expecting another intervention. When something becomes very obvious, the edge disappears. And that's common across all markets. You know, it's the same thing with, for example, quant strategies. That's why Jane Street and the Medallion Fund and all these other people don't expose the strategies in any way, even to their own employees, because if it got out, they would lose their edge and then the money disappears. It's the same thing with, you know, really anything, historical patterns to some extent, technical patterns. It applies across the board, really. Long aviation stock, BO1 and BO2 releases skyrocketed. Did they? That's interesting. I'm sure when you say BO1 and BO2, do you mean Call of Duty? I'm really hoping that's what you mean, because if not, I'm going to sound like such a nerd. But if so, that is an odd correlation, I think. That's usually what you do too. Yeah, I think it's the best way. US dollar CAD. Yeah, so actually, I'm not sure. Dollar CAD was getting a bearish reading last week. Let's see if it still is. It is. So we've got -6 on dollar CAD, and actually it's changed. It's lost an extra point in the past 24 hours, which is nice. It just helps confirm a little bit of the direction is actually strengthening. So the setup is very similar to the Australian dollar New Zealand, actually. Do you remember when we were drawing the weekly level here and we've kind of come back in? It's the same approach. The problem is with dollar CAD, again, with the dollar, we've got CPI tomorrow. That will be a big indication for what I personally want to do with the dollar, whether I want to take more of a bearish stance or a bullish stance. So the other sort of issue here is the daily time frame is still quite bullish with the moving averages. The RSI is pretty healthy here. So I think what I would rather do is actually wait for price to come down into this level and then assess what the situation is. So if dollar CAD flips bullish or even slows down, it might be worth being a buyer actually at this level and letting the bearish score play out for this sort of pullback on the daily. I think that's kind of what I'd rather do, because I really don't want to sell into this daily time frame. It just looks a bit too bullish. Mean reversions are great. I do really like them, but it's just not something I trade. It's just a bit too risky for me. I like to trend follow. And in this case, I just can't do that. What else have we got? When I have both fundamental and technical on the opposite side, I stay put. Yeah, it's the easiest way. There is one way to do it, actually, if you go down to lower time frames. So for example, if the H4 is bullish and the fundamentals are bearish, go to the H1 and try and get an entry. But I don't really like doing that. I like to just stick to the plan as rigidly as possible. What do you think today? Buy or sell? Buy or sell what? Apples, dollar yen, cars? Buy or sell what? Black Ops. Oh, right. Okay. Interesting. What is cheap currency in the major ones? My friend, I don't know. What do you mean? Like, do you mean to just buy and hold, or do you mean to trade as in it's at a low price to then buy up? I'm not really sure what that question means. US bond market is the rock star. Breaking and grappling the higher. Oh, breaking and grappling higher on the day. Yeah, I think. Hold on. Oh, wait. No, it's okay. I was looking at the wrong chart then. Yes. So I think really we're not going to see much on the dollar until we get the CPI data tomorrow. Again, I know I sound like a broken record. I keep repeating the same thing. But I really do think that is the big event. So I don't really like to do technicals on yields. I think that's a little bit silly. But still, we are sort of sideways on the yields. We are kind of printing higher lows, but there's no real direction here. But I do think the markets are still pricing in hikes, obviously. So yeah, the only thing I can really do is wait for the data tomorrow. If we break lower on the yield, we break higher, and that will be a big telltale. If we get cooler CPI, yields drop, and then we can expect weakness within the dollar, and then gold up, and obviously vice versa for hotter CPI. James, have I seen squiggly lines? No, I haven't. I'm half Chinese, but I have no idea how to read it, type it, spell it, write it. No idea. Dollar Swiss. Dollar Swiss is, let's see, actually. It was bearish. Do I still want to be short? Yeah, so it is bearish on the Edge Finder, but it's very much the same as dollar CAD. So fundamentals are bearish, but the daily trend here is bullish. So there's not really much I want to do with dollar Swiss, and then the H4 is looking actually even more bullish. You know, we're following quite a nice bullish trend here. So unfortunately, as I said earlier, getting pulled in both directions. Technicals are bullish and fundamentals are bearish. So I can't do anything. Both are too conflicting. Do I ever dream about the charts? No, I'm not a loser. No, I'm joking. Well, actually, no, I'm not joking. But you know, if you're having dreams about the charts, you should probably step away. I also think that's kind of an odd thing. If you ever think about it, I don't think anyone has ever had a dream about a screen. I don't think I've ever had a dream where I've got a computer or a phone or anything like that. I don't think many people do. I don't know. Anyway, I think PPI is also, yeah, PPI is absolutely important. Yeah. Gold is going down. Next bottom price. Let me get a tarot cards, Magic 8 Ball. I'm going to say 1,372.9 is the bottom on gold. Anyway, ladies and gentlemen, I have to head off. We have got the one and only Alan Perez coming to take over the show. Guys, enjoy the rest of your days. I'll see you all tomorrow. Thank you for being here. Stay safe. Don't get margin called. And yeah,
if you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free to join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everybody. Hope you're doing good. Kiesser says it brings up a good point, and I'm going to answer this point. If you're dreaming about the charts, your position is too big. Well, brother, if the position's too big, you're not even sleeping at all. I'll tell you that. I've definitely had that before. You won't even be able to dream because you'll be awake, forcing yourself to look at the chart. But that's why you got to position accordingly, guys. Be responsible, okay? All right, let's go ahead and see what's going on here today. We had a fantastic workshop early in the morning, so I was able to get up to speed here with what's going on in the markets. Let's see, anything new on Trader Hormuz? It's been back and forth. Didn't see anything this morning. I saw some stuff in the weekend. Let's see what prices are doing. Where are you at? Oils. 3% on the day, on the 200-day moving average. I probably expect that it's going to just hang out here until you see what happens tomorrow, or unless you get something brand new as far as escalations go. The dollar is flat today. Futures market on the equities is S&P's flat. Nasdaq's down 1.2. The VIX is up 7%, and yields are green on the day. So I would say a moderate risk off day, right? You're not seeing too much going into the dollar. S&P is kind of flat. The Nasdaq showing some weakness. Yields are up, oil's up, VIX up. So I would say it's a moderate risk off day that would probably be fueled by tomorrow, depending on what CPI brings us. Julius Caesar says, do you think the East war will escalate? Man, I have no idea. At this point, I have no idea. It can go either way. I thought it was going to be over. I thought that you had the MOU signed, the Strait of Hormuz opened. You had some positive chatter from both sides. That's not the case, apparently. And so it's kind of back on, but we'll see. I will say, though, someone in the A1 Trading workshop this morning did tell me, and I confirmed that the Strait of Hormuz is still open. Like, ships are still passing on through. In fact, you had a couple, like 20-something, maybe escorted by the U.S. military, and another handful that passed without the military. So it seems like the Strait is still open. It's just a matter of, like, is it going to be reclosed? What is it going to look like? Which I think is like the real kind of worried, thing hanging over the market's head there. Am I bullish or bearish on gold? I'll definitely talk about that as well. Eyes wide open. You don't even need caffeine, Simo says. Yeah. Thoughts on futures trading? I think it works, man. Futures is just another way of doing it, right? Like if you're trading the US dollar, you can do it through the futures market. You can do it through an ETF that tracks the US dollar, or you can do it through currencies like a traditional Forex broker. But futures are good. Futures are really good, I would say. And will Apple see new highs? I don't know. Is Apple doing something interesting? Is that why we're bringing it up? Let's see. Apple. Oh, look at that. It looks like it's making highs. Cool. Any apples in there? Apple investors. Hope you're enjoying the ride. Sluggy, good morning, man. Good to see you. Simo, as always. Tony, Kier, if you're out there, all of you guys. Hope you're doing great. Alan, our beloved Trump just waiting for the World Cup to end. You know what? Stuff started hitting the fan the minute U.S. lost the game. So maybe that's something to do with it. Maybe he's a little upset. I did say this. I would have loved to see a U.S. versus Iran World Cup match. That would have been awesome. I would have loved to see that. Oh, man. I would have loved to see that. That would have been probably the most watched game in history of World Cup. U.S. versus Iran. Markets seem to love U.S. exceptionalism more than they fear war and escalation, and good for a reason, in my opinion. Yeah, I think that's the overriding thing. I think the market is still hanging on to the idea that eventually, one day, the war is going to be over. Hey, Max, how you doing? Yeah, that didn't happen. Would have been great. I would have loved to watch that game. Interesting rotation again. Nas open down, S&P open up. Yeah, people are getting out of the they're going into the broader market, probably going more defensive, I would say. More defensive mode. All right, let's see what's going on, guys. Let's extrapolate what's going on. So we have oil higher today. What are my thoughts here going into tomorrow? My trade ideas. Oil higher today. If you see a continuation, if you see it overcome that 200-day moving average, then likely you see yields higher, which they are green today. They are definitely pricing in a hotter CPI print if I'm looking at this correctly. So if oil overcomes that 200-day moving average and you got a solid close above this 200-day moving average, and you start to see the war continue to be not as clear, then I would say we probably see oil retest back into this upper level, this 84 handle. This 84 handle was basically the floor throughout the war as it was escalated. So every time price got into here, pretty much you had a bounce above and buyers bought this dip. So if you were to see oil pop, I would act as this support here probably turns into resistance, and then you will see what happens after that. But that's kind of what I would look for. If you get a cooler CPI report, or maybe more so a peaceful exchange going on with the US and Iran, then likely this 200-day moving average holds, and then you probably start to see something like this. This would probably be the new channel that we operate under. So this was the previous channel here from 118, 119 to 84. This would probably be the new one. If it would be either 76 to 66, for example. So this would be kind of where we would be under. So we'll see. We'll see what happens. We've definitely seen this before, where as the weekend is coming in, you have big words exchange, you have lots of action, and then as the market starts to open on Sunday night, Monday morning, you start to see things more peaceful happen, and then you get more risk on flow. So that's definitely happened before. I wouldn't doubt if that happens again. Okay, and then as far as what's going on tomorrow with CPI report, well, you've had oil prices lower for or trending lower since all of June here. So I would say that if you have lower oil and that translates into CPI improving as far as a cooler print, then that's good news for the Fed. But if you have the lower oil in the month of June, but the inflation number does not move at all, then we have bigger problems, and inflation is more sticky than perhaps the market thought. So I think the market is really looking at this and saying, is the lower oil price actually effective to CPI, to inflation? So I expect big movers tomorrow. So in the event that you were to get hotter inflation in the US, obviously that means stronger dollar. And what I would look to participate if I were to get a stronger dollar would be, I like Kiwi dollar to the short side. I think from a technical perspective, you have this level of resistance as long as with that 200-day moving average as well. If you were to tap into that to the downside, that would make a lot of sense. You also did have right here before, RBNZ came out surprisingly hawkish, and that was very short-lived as well. So if you add that along with a stronger US dollar, broader, then Kiwi dollar to the short side makes a lot of sense. But if you were to get a weakening US dollar and broader strength across the other currency pairs, I wouldn't long Kiwi dollar. So I would only short it. I wouldn't long it. The reason why I wouldn't long it is because I think there's better opportunities elsewhere. Where I would long would be, I like the pound dollar. I think I was listening to James towards the end of his segment. I think he was talking about pound dollar longs. I like the idea. It's definitely been getting a boost up here recently. However, I wouldn't chase price at this 200-day. I would rather wait for some kind of a pullback in the event they have weaker US dollar. I wouldn't short this though. So if you have a super strong US dollar, I think there's better ways to go ahead and participate in that rather than going short pound dollar. The pound basket as a whole has been doing quite well. In fact, oh, look at this. Dubai, this just happened about a minute ago. Dubai plans new port to bypass the Strait of Hormuz. We'll see what happens there. We'll see what happens. Where was I going with this? Oh, the pound, right? Look at the pound. COT data, the latest buys and sells from last week. Institutional buyers here are accumulating the pound heavily on the week-to-week basis. This was Frank is also the second leader there, which is interesting. But look at that. Pound dollar is at the top of this list. And if we go to the top setups page, if you go to top setups page and you just type in pound, oops. If we type in pound, you can see that the pound basket as a whole is doing quite well. You have pound yen bullish, pound Aussie bullish, pound dollar bullish, pound Swiss neutral, pound CAD neutral, pound Kiwi neutral, and euro pound, which is long pound and short the euro, is bearish. So that's pretty good there. So I wouldn't short the pound dollar if you have a weakening US dollar, but I will long it if you have a weak US dollar. So, or did I say that right? I wouldn't short pound dollar if you have a strong US dollar, but I would definitely long pound dollar if you have a weak US dollar. I said it correctly. What else would I do? So I would go long pound dollar, short Kiwi dollar. Dollar CAD is a good one as well. I like it a lot. To the long side, I'm either buying here or I'm buying here, either or, but I'm still looking to be fundamentally directionally long dollar CAD. What would prompt me to go long dollar CAD at this level here is if you have a strong CPI report tomorrow. That would say this level here, which was previously resistance, acts as support as you're getting a pullback into this level here, and then you just go long, and then you trail stops along the way, and you would be still in line with this upward trend. However, if you get a cooler CPI report tomorrow, then I expect some continued dollar weakness and this chart continues to roll over. And in that case, I wouldn't short it, but I would wait for a buy the dip opportunity somewhere around here at 1.395, right? This level here was resistance as well at one point. If you were to get the pullback into this level, the 200-day moving average also lines up there as well. And then I can participate to the long side as well. So either along here or along here, either or, I'm in good shape. From a Fibonacci retracement standpoint, if I put a fib from low to high, the 50% lines up right there with that 200-day moving average, which will probably creep up to, which is really good there. So we'll see. We'll see. Am I still in USD-CHF? I am, and it's the most boring thing ever. So USD-CHF, right there by the entry point. I'm tilted more in favor of a cooler CPI report, being honest here. That's the stance that I took, and that's the risk that I accepted before going into the release. Though nothing has really happened here as far as USD-CHF. It was at one point in profit. It's back to break even, give or take. So it's going to be contingent on what happens tomorrow. But the good thing is I'm very open to what happens either way. But I'm hoping that, these lower oil prices that we've seen in June just translate and move the needle to a cooler CPI report. And in that case, I do expect some broader dollar weakness. We'll see what happens, though. We'll see what happens. You are at a very good level of resistance here. So from a structure standpoint, I'm pretty happy with my trade. And then if I were to continue in the trade, and if it continues to work out for me, then I continue and target this 200-day moving average right here. And then from an edge finder perspective, if you look at USD-CHF, it's still getting a whoa, it just shifted. It was literally a bearish reading this morning. Oh, okay. What is the actual majors doing then? Did that change all the majors as well? So dollar CAD is still bearish. Dollar Swiss moved up. Why? The trend? It's the trend that did it. The technicals on a lower time frame, I'm sure. Yeah. So that was a big shift. Unless we got news in the weekend about Swiss. No, nothing. Okay. So now it's a neutral reading. Uh-oh. Hey, Marco, how you doing?
Hello, doing pretty well. How are you?
Pretty good, pretty good.
Nice. So, what happened over the weekend? I saw some escalation, then de-escalation before the market opened, but I don't really know much about it. So, do you have any more information on that?
Same boat, man. I don't even know at this point.
Yep.
I don't even know at this point. Because I don't even know, like, if you were to get a headline, how much weight it pulls.
I'm guessing
like,
very little.
Yeah, I would say the same thing. I mean, you're having the dollar is pretty much flat right now. The only thing that's really moving is the VIX, which is up 8%, but it's still at 16, so it's still low. And oil's up 3.5. Everything else is pretty quiet. So
Yep.
And then you're seeing things like this, which again, I don't know how much weight it's going to pull, but you have Dubai plans a new port to bypass the Strait of Hormuz. So
yeah,
that would be good, honestly.
Well,
that would eliminate some of the leverage that Iran has. And then perhaps we can just ditch them, let them do their thing, and then we can just go, or we can destroy them and still have oil flowing. Whoever, get the best of both worlds, I guess. But that's kind of how I see it.
Is the strait open? Is it closed?
It's tough
to get good information, to be honest.
Yeah, I saw that you had about 20-something ships escorted by the U.S. over the weekend. Okay. And then another a handful of ships that were able to pass without the U.S. helping them. So it seems like it's open. On a relative basis, I don't know how open it is to what it was a week ago or 2 weeks ago. I think if I just Google Strait of Hormuz ship tracker or something, I could.
Yeah, there was a tracker on X or Twitter, but again, reliability not sure. of the reliability, because again, some sources say that ships were passing through, I think, 40 per day, and pre-war, I think it was 50 or maybe even 100 per day.
Like
So
I see
the
this.
traffic, yeah. So this thing is
Like this is inaccurate because it says it's closed since February of 27, but you had a period in time within that it was open. So obviously not. So
yeah. I mean,
yeah.
ships definitely passed through, so that thing is just not accurate. And I think it's the exact same thing I found on X. But a lot of ships are passing through with their navigation sort of shut off, basically, so that no one can see them except visually or on the radar. But the tracker is basically turned off. So yes, definitely ships were passing through even when the tensions were at the highest level. So it's just the question is how many ships are passing through and how many are still at port. But looks like the market has decided to sort of kind of disregard the escalation. I mean, yes, oil prices are higher today. Although this is U.S. oil, I usually look at Brent, if I'm being honest, as far as the conflict goes. Brent, as I found, is a bit more accurate. Well, okay, Brent is up as well. So a little bit of a risk off. I can see stocks down a bit. The dollar kind of flat on the day. But I think the big thing this week is going to be the CPI. And did you see the forecast? So the forecast for the...
Cooler, right? If I'm not
Yep.
mistaken.
Yep, so 3.8, which is actually pretty low. I didn't expect such a low forecast. It's going to be tough to beat that. So I think as far as the actual number goes, it's going to be tough to print below a 3.8.
What are your thoughts, Marco? I wonder, this is my question, is did the lower oil prices in June, was it sufficient enough to move the needle in terms of cooling CPI a bit? Or is it not enough? And in that case, if it's not enough, then inflation is a lot stickier than we thought. But do you have a bias, Marco? Like, is it going to come out cooler? Is it not? Do we need to see maybe longer oil prices lower for it to really translate into something? Like, what are your thoughts on that?
My bet is on a cooler print. So most of my positioning is actually around a cooler print, which is going to be bearish for the US dollar. So I'm selling the US dollar. I didn't think it was, I sort of expected a below 4% print, but 3.8, well, maybe it could definitely happen. The sudden spike in inflation, if you look at like, let me just bring up the edge finder here. So if we look at the edge finder, and if we look at the CPI, Marco, nice glasses, thank you. New ones. The old ones fell when I was paddling on a paddleboard. Yeah. So I was paddling on a paddleboard and decided to jump in the water, but forgot about the glasses. So those are now at the bottom of the sea. And to fish them out, so there were divers near, but to fish them out is the same as like getting new ones. So essentially, I just got new ones. Makes more sense. Anyway, inflation. Economic data, inflation, CPI. So the spike from April, 3.3, 3.8, 4.2, I think this was oil. I think this was energy, like 60, 70, maybe even 80% influenced by energy prices. And I think because the strait is now, or was open, the sort of the June print or the July print for June will come out, let's say, colder than expected or lower than expected. And it kind of goes well with my thesis that the inflation will naturally come back down, that the Fed will not hike because the current rate is restrictive. Hiking rates, there's like a 12-month delay if you hike. So even if they do hike and then inflation naturally falls, it doesn't make logical sense to me. What makes the most sense is for the Fed to remain in wait and see. So just wait and see for this whole year to see if the inflation naturally starts coming down and not to prematurely hike those interest rates. But the most interesting part to me is like the market kind of anticipated this forecast. So what you would expect, well, at least what I would expect, is when this forecast number came out and it was Friday last week, you would expect for the dollar to drop. But the dollar has been selling off way before that forecast. So way before this number was printed, the dollar was selling off. So the market is definitely forward looking. And that's why I thought about, at one point in my sort of trading career, I thought, why not just trade when this number comes out? So not the actual print, but the forecast, because most of the time the actual comes out the same as the forecast.
And then pull out right before it comes out.
Sorry?
And then pull out right before it comes out.
Well, yeah, possibly. But just, execute the position once the forecast number prints. But the market is forward looking. And once the forecast is out, it looks like majority of the move has already happened. And then when the actual number comes out, if it's right on the dot, the opposite very often happens. So there's profit taking when the actual number prints.
I had a question for you, Marco. You've talked about this before. Do you think that there's a possibility of this becoming another forever war?
Well, for sure, I do think so, but I think Trump is going to downplay it like it's nothing until the midterms. So maybe once the midterms pass, then he could escalate back again, boots on the ground. I don't know, maybe if it makes sense in his mind. But looking at the track record, it's not great, Unfortunately, anytime the US gets involved in the Middle East, it tends to last for decades, And I mean, it's not just the US. Like Russia tried it in Afghanistan. It broke the Soviet Union. So basically, that was kind of one of the main reasons why the Soviet Union fell apart in the 80s, 90s. So it's tough. Middle East, just maybe best to stay away from there. But then they develop nukes and then they want to do some stuff. So I don't know. I'm glad I'm not the president at the moment. So,
yeah.
But what do you think?
I think so. Oh, goodness. Alizé is burning something down there. Hold on.
Okay, I'll take it over once the alarm stops. So, Sluggy says, Marco, get Meta glasses. These are pretty similar, I would say. Yeah. But let me just bring up my screen on the stage. So that's kind of for this week what I'm looking at. If we look in the Forex Factory calendar, if we look at the CPI, it will be a very, very important number. Again, I think it prints cooler. 3.8 absolutely could print at 3.8. It should help my positioning. I'm actually looking to possibly add more size to the dollar shorts, but after this print, so after the CPI happens, I'll look to add. Then we're getting the Fed Chairman Warsh testifies, so I know that's on a lot of people's radar. Personally, I think it's going to be a non-event. I think he's not going to say much or not going to reveal much. So yeah, I'm going to follow it, but I don't think we'll get much. That's tomorrow. PPI is on Wednesday. Again, another very important inflation print. BOC monetary policy. If you're trading the CAD, this is going to be very important. So to be honest, at the moment, I don't know much about the CAD. I haven't done a lot of work on that. So I'm going to have to brush up on the CAD sort of state and fundamentals. We can do a quick analysis here. Alan, are you back?
I'm back and I'm alive.
Awesome. Nothing burned down?
Nothing burned down. No, but I did have an episode myself where I literally initiated a humongous flame in the house.
Oh shit.
So this was nothing. Yeah, sorry. Yeah. Continue with your thought and then we'll go over.
I was just talking about the CAD, the Canadian dollar. So we're getting the Bank of Canada monetary policy report in the statement. I don't know much about it, so I need to brush up on my CAD, but it could be pretty important. The main thing I have in my head is most of these central banks I expect them to pivot. So they're they're hawkish at the moment because of high inflation, because of the oil prices that went crazy after the Middle East. But oil prices are now back to sort of neutral, and I'm expecting these. I'm expecting these central banks to start pivoting to a more dovish tone. The question is, who's going to do it first? What can we catch? We know the RBNZ, they decided to be hawkish, which in my opinion is a big mistake, but what do I know? So I lost money on that bet, but looking for more bets. So the first one that cracks is going to be the best one to short. Again, I'm already short the dollar, but looking to add some more let's say shorts on central bankers that wanna be dovish. But what about you?
Yeah,
Besides
so
the dollar.
besides the dollar, actually this morning on the A1 workshop, someone brought an idea to me, and then we investigated together, and it looks quite well. But the pound has been kind of rising from the dead here. Pound dollar here, you can see it's clearly getting an uptrend here. It's up about from the lows, the recent lows, about 313 pips, versus the euro dollar is up only about 145, so almost double, right? But if you go to Edge Finder and you look at the pound, if you toggle on miners as well, and you just type GBP, you can see that the pound basket is actually doing quite well. Pound Aussie is bullish, pound yen's bullish, pound dollar's bullish, pound Swiss, pound CAD, and pound Kiwi are neutral, and then you have euro pound is bearish. I like that. If you go to the latest COT report, the biggest net change positive that we've seen in the pound, it's the strongest one. And then if we go to Forex Factory, this is what I like to see. I'm waiting for this to happen. I think it's Wednesday, if I'm not mistaken. They will have their Thursday GDP, UK GDP. It's supposed to come in positive actually, versus the previous one that was bad. Why I say that and why I bring that up is the pound has been doing quite well recently. The pound basket seems to be getting a bullish reading. And if you go to their economic heat map, UK, you can see here that they're doing pretty well. Their growth is doing okay. Retail sales positive, services positive. Manufacturing is not so much, but it's not as big as services. GDP flat. So if you think if I see GDP come in better than expected, then that just even improves the outlook even more for the growth in the UK. And then you can start to look for, me personally, start to look for opportunities in the pound basket. One thing we looked at, if you remember pound Aussie, Marco, to the short side, crazy trade, right?
Yep.
If you look at this chart here and you zoom out here, it's starting to kind of reverse a little bit. So I think that if you were to get a breakout above this level of resistance and overcome this 200-day, and you continue to see this improvement in the UK, then I think the pound Aussie to the upside story looks pretty good. Let's bring up pound Kiwi as well.
Yeah,
it's
if we can bring
back.
It 200.
Pound Kiwi is pulling back here. But if you find some buyers at this level of support with its 200-day moving averages, maybe you kind of bring this lower, however you want to do it. But you put a fib from here to here, you are at the 38.2, the 50, and the 61.8. So I would probably, if I'm looking at this to the long side, anywhere within the 38.2 and the 50 would be a good kind of buy the dip opportunity in pound. So I think that with pound Aussie, you have the potential for it to start to reverse its super aggressive bearish trend. With pound Kiwi, maybe you can buy the dip. Pound dollar, the one that you're in, I like it to the long side as well. Like if I were to get a pullback into maybe like over here, I would probably, participate in that as well.
Yep.
So that's kind of what I'm looking at. Pound CAD I haven't looked at, but the CAD has been weak. Let's see if we were to get a pullback into here, maybe this is a very developed trend, but maybe pound CAD over here. So I think the pound in general is something worth looking at. And if you do get a strong GDP number, then I think that only improves the story. And then perhaps the trend over the long term starts to improve because they just recently overcame their kind of political turmoil that they had with Starmer. Now he's out of the picture. Now you have a new guy that's probably not, I'm not saying that the new guy is better than Starmer or he's going to really change the UK picture, but at least it's not the uncertainty of like who's going to come out next or are guys resigning, things like that.
Yeah, yeah. I do like that. And I've had Euro GBP on the radar to sell. But pound Aussie, if it can break the 200 to the upside, I think that could be pretty good. Pound NZD, if that bloody RBNZ can pivot to dovish, finally, that would be nice. So, like, and also on the pound NZD, what's good is it's probably an overreaction. So we know the RBNZ event was hawkish, but the last time it was a big overreaction. So it could be a pretty good opportunity to that thing. So it could be pretty good opportunity to buy it. So actually, out of all of them, I like the pound NZD. What's the score on that one?
That one's neutral though, I think. Let me see.
Neutral. Okay. Yeah.
It's neutral.
Yeah. Well, maybe a quick play.
A lot of the score though is because of the trend, which obviously, as we're discussing, it may be an overreaction. If you start to see a recovery in that, then maybe that could help it. But I like the pound basket too, and I like the Kiwi dollar to the short side as well, like fading it, like we talked about. Overreaction, RBNZ, probably not the best thing for them to be super hawkish like that. If you were to get a strong US dollar, right? If I need to repivot out of my dollar Swiss short into long dollar, I think one of the ways I would do it and really kind of express it would be with Kiwi dollar shorts. If we kind of tap into this level here, where that resistance at 2-day moving averages and just take it to the short side.
Yeah, I would prefer something that's not connected with the dollar, if I'm being honest, because I'm bearish on the USD, but on the pound, again, starting to become more and more bullish. So I like that one a bit more. And but the main story behind it with the NZD would be fading the NZD strength. So yeah, because of the over exaggerated hawkishness of the RBNZ. I mean, it's going to happen sooner or later. It's just the question of, will you survive to sort of to wait for that pivot from the RBNZ?
Yeah.
What's your take on the yen?
Screw the yen, man. No, I'd buy it on dip, but we saw something. I saw something about Japan. They were doing something. I think they're throwing stuff at the wall and seeing what sticks, but nothing's really moving the needle, in my opinion. But that could also be too because of the war escalating again, right? Like that safe haven in the dollar is really pulling it up.
Okay, this is it. This is pretty important.
Yeah,
so this
Japan
is from
Chief
today.
Cab. This is from 2 a.m. my time. But again, didn't do much. There was something.
Let me just show you something.
Yeah.
So it's all about that GPIF, TGIF, not TGIF, but GPIF. Japan currently has no plan to change GPIF's target asset allocation. Could work within existing ranges. So it's all about those huge pension funds, as we talked about. I think we talked about it last week on Friday. Essentially, they have trillions of, I think, $1 trillion of US dollars that they can take out of the US, put into Japan, or take out of Japan, put into the US. Essentially, look at what happened the last time that they did something in terms of moving capital. So let me show you my screen. Let's go to UJ. And let's go to October 3rd, 2014. This is it. So basically, around October in 2014, the Japanese pension funds announced that they will be increasing their exposure to foreign assets from, I think, 10 or 12% to 25%, which means that they bought a bunch of US bonds, I believe. So they bought a bunch of US assets. Look what happened to UJ. So huge explosion up. That was right after the announcement of 14 to maybe even 15%. So what I'm thinking is a similar move could happen today because they're looking to do the opposite thing.
To the downside, yeah.
To downside. They currently have 25 to, I think, maybe even 30% exposure to foreign assets. And if they reduce it to back to 15, back to 12, this could completely reverse. So this sort of 14% move could happen again, but to the downside. The market doesn't seem to care at the moment. The question is, when will the market start to care about it? And if you place a trade, could you survive through the negative swaps? USD JPY is not the answer. So Swiss yen could be an opportunity. Let me just check on the Swiss yen. So
I'm curious to see what when in that scenario, that 2013, 2014 scenario, when did they announce it? And then when did they actually announce targets? Because one of the things that I read when it comes to this new thing that they're trying to do,
okay,
and why it's not really moving the needle, is because it's just an idea. They haven't really released any targets, any percentages, any like that. Like you said, with they wanted to increase that foreign exposure from like 12% to 25%. That's a real number, tangible, that you can look at, right, and start to price in. I think right now it's just more of a theory that they have up in the air. So I'm curious to see to see kind of the price action develop with a timestamp of when they announced that of foreign asset buying versus when they released the actual kind of framework behind it, and then what the trend looked like after that. That way we can kind of see what we can expect the same with this situation as well. But you were going to show me something with Swiss yen.
So for the Swiss yen, so this is what happened. So you had the 3rd of October, somewhere here, and that's when they started to increase their foreign assets exposure, and there has been a big appreciation after that. So even Swiss yen could work if you could sell it, or if you want to sell it at the moment, because the swaps are, depending on your broker, they should be at least a little bit positive, or maybe like break even. So you could hold this for a month, 2, 3, 4 months. And it's kind of the only asset that you can hold. Rest of the stuff, you'll get crushed with swaps, because no one knows when those pension funds will actually start to come in. But important to note, they are government controlled. So if government wants them to do something, they will abide. So it's all about the MOF, the BOJ, and WEDA. And
I think that's an effective solution too, because it would be legit forced demand, forced buying. That it could work. I think it's just a matter of like, when are we going to get those actual tangible numbers, framework behind it? And I think after we get that, then the market would be like, okay, this is a real thing. Cool, price it in.
Yep. But for traders, it's all about getting in before, before everyone starts to pile in. So that's the trick. That's why trading is hard. And another interesting post, not to hold you for too long, but just sort of last words. So like traders, they're not in the business of predictions. They're actually in the business of, making money, of course. So I see a lot of comments on Twitter like, this trader just pivoted from being bullish to dovish, from bullish to bearish on the S&P in 3 days. Now he is bullish again, so he flip-flops every 2 to 3 days. But that's trading. Win rate doesn't really matter much. Like most traders, stock traders, they have 20 to 30% win rate, which means they're terrible at predicting where the market will go. But when they are correct, they make percentage, they make bank. So like prediction is not the business of a trader. It's putting in size and basically squeezing out as much as you can out of a move.
Absolutely. George Soros, one trade, right? He could have had a 99% lose rate, and it just takes one outsized winner to really move the needle in P&L.
Absolutely.
All right, Marco. Thank you so much, man. I think we're scheduled tomorrow to cover the actual CPI release. I may be wrong, but I thought I saw that, so that's cool. So I will see you tomorrow, man. And hopefully, hopefully, I'm pretty confident that we'll start to see a lot of action, whether it is in the direction we are positioned in now, which is short dollar, or we have to pivot to long dollar. Nonetheless, I do think that there will be some activity to be made. So I'm excited for that.
I think so as well. Thank you, Alan, and see you tomorrow.
All right, man. Take it easy. Bye-bye.
See you. Goodbye. Sponsor. So if you guys are looking to get funded, Ola Prime is 35% off. So 35% off Ola Prime. The code is A1 Live. Okay. So this is the sponsor of the stream. Now, we did the homework and the Trustpilot is good. Let me show you. Ola Prime Trustpilot. We had members in the A1 Trading Discord who got steady payouts from Ola Prime. 2.6K reviews, 4.5 stars. I would say that is really good in this niche. They are reviewed by Deloitte, which is another green flag. And my personal favorite thing is that they don't have a consistency rule on some account types. So no consistency rule. If you're a swing trader, you'll know about this, and it's a big, big problem. So this prop firm doesn't have it, and with the code A1 Live, you get a great, great price. You get 35% off. Take advantage. The link is in the description and in the comment section. Okay? Comments. Let's see. Except my glasses, what else do we have? Sluggy says, I'm positioned for a cooler dollar too. Awesome. I like to see that. Hello, I'm Hassan and I'm new here. Which pair are you trading? Trading everything. If you want to join the A1 Discord, do so. How do we know when it escalates? Trump bombs Carg Island. I think he already did bomb it. Not sure. GPUSD pullback a little bit. I have trailed the stop loss on GU. So on GU, my stop loss has been trailed to 132927. I'm going to trail it a bit higher. I'm going to wait and see what happens to the 20 MA and to the 200. But so far, one of my best positions this year. I like pound Aussie to the upside. GP NZD2, okay. Marco, but the Aussie is weaker than even NZD. I like GP NZD for the reasons that I mentioned when talking with Alan. JPY is a sell until it's not. That is correct. Why is no one talking? And like they say about assets that just go up over time. For example, check out USD KRW, which is the South Korean won. Everyone was saying this thing is never going to go down. It looks like it just started to go down. So never say never. If you heard the song from Justin Bieber, it's true, especially in the markets. There's always a small chance that something will happen. Okay. I still have, no, I don't have. So that's it for my segment. Thank you very much for watching. Let me just give you a brief summary before we go to conclude this live stream, or just my segment, because Tiger is coming on in 30 seconds. To conclude, big events this week will be the CPI, the Chairman Warsh, and the PPI. I think the market is starting to become a bit quiet. It's starting to become a bit flat going into that CPI print because a lot of people are watching it. My best advice would be a little bit patient today. Wait for that CPI print. We're going to get more clarity, and then we can look to add on more size. If I'm going to add on size, it's probably going to be bearish on the US dollar and dovish in general. So that's about it from me. Thank you very much for watching. Don't go anywhere. You have Tiger coming on, so you're in good hands. Thank you, and see you in the next video. So tomorrow. Goodbye.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1 Live. That's A1 Live for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Well, what's going on, everybody? Happy Monday. Hope you're all doing well out there. Had a good weekend, relaxed, all that fun stuff. Ready to go and do it all over again. So We are here. Slower day to day as far as data goes, obviously. I know the guys have all kind of echoed this already, but I'm no different. I'm waiting to see what that CPI data is going to give us tomorrow, the PPI on Wednesday, and then retail sales on Thursday. So those are the biggest items. Canada, of course, has their rate statement coming out, projected to remain the same, remain unchanged on Wednesday as well. And then Governor Bailey with some lip flapping tomorrow afternoon here in the States as well. And then we'll end Friday on some University of Michigan consumer sentiment readings, where they are projected to kind of go back onto the expansionary. We'll see how accurate that is according to the pollsters over there in Michigan. So that is a look at the data. And I know I kind of touched on it last week, but if we start getting some of these items coming in bearish for the dollar, might go a long ways into helping us determine if gold maybe give us a bullish look. I mean, right now it's pretty neutral. And in fact, I think we did fall back to a +1. I think that's what I saw earlier. 0 now. Okay. So yeah, there we go. We're going to need a lot of data to kind of change hands of the bullish side. So it's as neutral gets right now. It could go either way, but the most recent data sets for these U.S. reports were all either bullish or neutral. So we'll just wait and see how that data comes along. Guys, as always, let me know if you have any tickers in the chat over here. As Marco alluded to earlier, you do have the A1 live code for Ola Prime for the 35% off of the account of your choice. Thanks to Nick and the company there getting that set up for you guys. So definitely go give that a look. If you have any questions, olaprime.com, and they have their rules page. That's a very robust and in your face, guys. So they're pretty transparent about the way they operate over there. So I think you'll like it. I love my account that I have with them. It's just the best. So anyway, yeah, give them a look. And other than that, I see, what do you got? 27G, Euro Pound. Any ideas? Yeah, it's given us a very bearish look. It's given us a bearish vibe on the top setups as well. I think it's at the bottom, isn't it? Or right there, tied with the pound, the Euro CAD. So Euro CAD, Euro Pound, Dollar CAD, all -6s. So when it comes to the trend, it looks great. Let's go over here to Euro Pound. You can see we've got a nice series of lower lows and lower highs on the daily on the right over here. The 8 EMA is comfortably flying deeper than the 21 EMA ahead. So that's the alligator's mouth opening to the downside, kind of your mechanical confirmation of the trend, along with the obvious, which is the lower lows and lower highs. So for me, I'm just looking for a retracement. Now, you can see we've already kind of bounced into one supply zone over here, but the challenge is that's a 2 hour, 1 hour, 30 minutes. So you're getting all those lower time frame confirmations on this zone right here, but really nothing on some of the higher time frames. So like if I go back to the 4 hour, that's not a good look at all. And then when we go to the daily, there's no daily confirmation right there. I mean, for a minute, this right here would have acted as a daily supply. But as you can see, we already closed the gap on it. If I just kind of zoom in a little deeper for you, you can see right here, this was our leg out, and this candle here retraced and closed the gap. So that took away the inefficiency on a daily time frame. So I can't utilize that as a daily confirmation. Same thing with the 4 hour, just going back over here to the right. Even if we look inside of that daily, looking inside of the daily would have given us a decent 4 hour zone here. But again, it closed the gap. So this is the 4 hour look right here where we closed it. Again, I just don't think there's any inefficiency left right there. The first 4 hour zone would be the one at the upper end, but it's basically going off just the 4 hours. So yeah, we could possibly utilize this as a 4 hour supply. I just dislike the fact I don't have a daily around it, if that makes sense. So, and it's low on the curve, so it is technically in your discount areas. I'd rather be shorting this thing much higher up on the curve. So for me, I drew up this daily supply much higher up. Euro Pound is one of those slower moving currency pairs. It only moves 27 pips on average per day. That's the range. So it's just, that's like the frozen molasses example I've used before. That's been in the freezer for a month. Pull it out, you try to pour it out, it's just going real slow. That's Euro Pound. But if we do make it up here to this overhead supply, then yeah, I do like some possibilities of some shorts possible shorts up here. So that would be, I think, the highest probability, because you can see this gap a mile away looking at this thing on the daily. Swing low, skip the leg out, go to the next candle. There's your inefficiency right there. That's what I want to see. I want to see an inefficiency like that. That's nice. So that's why I think that's the higher probability. And then if we just go back over here to the 4 hour on the left, you can see I drew in a 4 hour zone right here. So there would be our daily 4 hour confluence. Gap out. Now I got to say, the one thing I dislike about this is the volume. The candles are awesome looking. There's no denying those are some very bearish candles. But the volume on the first two wasn't really the greatest. If we just kind of zoom in a little deeper here, this leg out, this second leg out, the volume was just kind of puny, guys. The volume didn't really even kick in until obviously the next intraday session that we had. So that early morning volume just wasn't there. So that's going to be one thing that I kind of dislike about it, because that is towards the end of the Asia session. And that's just what we got. But hey, again, at the end of the day, got a hell of a gap on this thing. So this right here is keeping me in the ball game for this zone up here. Again, there's way too many candles to the left. That's going to be another -1. So this is just me splitting hairs, guys. But if you're just looking at the gaps, looking at the daily, I mean, you can't deny that's a pretty good retracement up into a better, what I think would be a little bit better of a premium spot than what we've got down here and we're currently bouncing in. So we are getting a little bit of a 2 hour bounce from this 2 hour zone right here, as you can see. But again, I just don't have anything around it. And I don't trust this as a daily supply because of the fact that the gap was closed. And that's why I'm deleting it. But we still are left with the 2 hour. We are still left with this 4 hour up here. So if I look at that 4 hour and I go divide it by 4 to get to 1 hour, let's see if I have any decent gaps here. I mean, yeah, again, it's a lot of candles on a 1 hour chart, but that would be your 1 hour supply. So it's given a tiny gap. It's not very big. I just don't like it. It's too low and the gap is not very great. The volume is looking all right. I'll give it that. The volume looks pretty good, but I just don't like the inefficiency. It's really small on that 1 hour chart. 4 hours, the highest time frame I've got. And again, I cannot utilize the daily because it was already gap filled. So I'm going to remain interested in this one that's higher up here, about the 86 level, 86 psychological level. And yeah, might as well put an alert there, huh? Get that alert put up there, custom date. I'll send it out through just the end of this week, 1600 my time. And that way it can yell and scream at me if we get up here close. So that right there, that daily is where I want it to scream at me. The 4 hour specifically is where I personally would want to short it, if everything else looks good. So that's the best I got for euro pound right now for you. Gold. Yeah, let's go look at it again. Let's go look at the chart. The good old gold chart. Daily on the right, as always. The EMAs are kind of rolling back over to the downside. Okay. The 8 below the 21. And as you can see, again, the 8 is rolling back lower. So that's a good look for the bearish side of things. Now, I have absolutely no idea what the data for the dollar is going to be tomorrow, Wednesday, and Thursday. That's going to go a long ways into helping me personally determine if I want to be going bearish or bullish. Because quite honestly, we could go either way right here. We've already bounced into that daily supply, that yellow one that you see there. The daily, the 4 hour. That was that one that I personally was not as interested in, was interested in the one higher up back when we did have a true bearish reading on the edge finder. But at this point, if we start getting a whole bunch of bearish data over here on the economic calendar, then that may go a long ways into giving us a bullish look on gold. But as far as the technicals go, I'm not comfortable getting into any type of longs unless we can break and close up here, guys. Get through the remnants of these supply zones I was watching and close, and then maybe we get a retracement to a new demand. But I don't know, because if all that data comes in bullish for the U.S. dollar, well, it's going to probably keep it neutral. It's definitely going to keep it neutral because most of those readings, I do believe, Most of them were bullish the last go around. So let's just go have a look. So we got CPI. The last one was a neutral report. We said PPI on Wednesday. That one was a bullish report. Retail sales was bullish as well. So you got 2 bullish, 1 neutral. And, you know, again, I don't think it's, if the data comes out bullish, well, the previous ratings were already bullish. So I don't know if it's going to help a case for a bearish look on gold. I just don't. It can do a lot of damage and miss these readings and give gold some strength, but we just don't have it yet. Again, we're straight up 0 right now on the edge finder for gold. Just going over here, taking a look once again, a little bit bearish on the data side, neutral on sentiment, but it's a little bit bullish on the trend. So it's straight up 0, right? Need a strong extreme rating one way or the other. So we'll just have to wait on the data to see what it gives us. So that's my thoughts on gold there. And then if we do end up getting, you know, at some point a bearish rating again on gold, well, then I think the first thing I personally want to see is a break of this most prominent, most recent swing low right here. Okay. Break and close below that, and then wait for a retrace. So just draw out a quick projection tool line here, close. Maybe we could use this as a little bit of supply. We don't know yet for possible shorts. So, you know, it's obviously not the look you want to see. Everybody wants to see, well, duh, Tiger, it's either going to go bullish or bearish, but we're truly, I think, in that middle range where we don't know. Just don't know what the data is going to give us. So the data will go a long ways into helping me personally formulate more of a bias. But right now, it's just I don't have a bias. So hopefully that makes sense. We don't always have to have a bullish or bearish bias on an asset, even if we love trading it the most. I know Nick loves trading gold more than anything, but I'm sure he's probably sitting here scratching his head too, because we just got to get some help with the data, because there literally is a case to be made for either one. But I think probably still more so on the bearish side, especially if we get this bullish data for the dollar. So we'll see. We'll see how that goes, guys. As far as double check, see what you guys got up here. Oh, Oanda, you know, real Kirko FC. I've never personally used Oanda, so I don't know how to. I wouldn't be able to be of help on that for you. One thing you could do is just go ask Grok. Hey, how do I trade gold on Oanda? Might be able to help break it down for you, or Claude, or whatever AI you guys like to use out there. So yeah, sorry I couldn't be a help for you on that part. Okay, top setups, guys. Go back over here because I know we got things on here like pound dollar, which was forever giving us a bearish rating, and now all of a sudden on the bullish side of things. The dollar obviously got weaker. So let's go take a quick look over here at the surprise index. Okay, dollar's at 60. So you go from 100% to 60. Remember, we've had a 40% drop on the strength of the dollar just on the fundamentals. And then you've had some other things kind of take its place, like the CAD and the Swiss. They've been exceeding expectations, a lot of their data. I would really like to buy the CAD, but here's what personally has thrown a wrench into things for me as a COT report. Most recent COT report we just got on Friday. If we go over here and get it pulled up, you'll see the very bottom is our good old friend Canada dollar for the currency side of things. So net short, heavily net short overall, but even shorter with this 3.39% short rating. So they got rid of 6,400 long contracts, added 15,000 shorts. Well, both of those numbers individually are bearish numbers, especially when you match them together. It gives you a pretty bearish rating. So I'm a little disappointed to see that. And as far as the Canada dollar, if we go over here to the Canada dollar, just looking at our strongest fundamental currency, what have the banks and institutions been doing on this? They've just been going heavily net short overall. Take a look at the yellow line. This is kind of your average or moving average, if you will, of the shorts versus longs. Just going downwards. See how many shorts are being added into the system over the last, few months or so of COT reporting. And you can see the long side going down and down, further down and down and down. So they've really started stacking up a lot of, shorts, net short of late. So that's just another, That's just another thing I'm looking at right now, is not being so fixated on the fact that it's at the top of the surprise index, but the fact that the smart money's been adding to the shorts quite a bit, like we just saw over the last few months. So I say all that to say, I don't know how excited I am on things like CAD yen, or even the dollar CAD shorts. Dollar CAD, I still need to see the thing kind of turn around on a trend anyway, but we'll still go take a look at these CAD yen just to have a look. Because and the reason I bring that up about the COT report is because when it comes to the top setups over here, guys, we got 16 different fundamental items over here. We got a couple sentiment, really 4 when you factor in the put to call ratio, the AAI investor survey that's behind the scenes, the new options, tool that Nick added in as well. Not to forget that, the options flow tool. Where's it at? Net options flow. Okay. But we've got basically 4 or 5 of those items now, but now, and then of course, a couple trending or a couple technical items. So for me personally, I say all that to say this, the COT is one of my personal favorites. So yes, it's given us a bullish rating, but that throws a wrench in that red box right there, just like down here on the Kiwi. Okay, bullish rating, but yet COT report had some net selling. I don't personally like that. And I try as hard as I can. If I had any item that I have to have in my favor of the bullish or bearish, for me personally, it's got to be the COT report. So that's why I'm not really interested in the CAD yet, guys. I'm just not. Now, it's older news, but when you see, like we just saw, the history of it and the big divergence that we're getting between the additions of all the shorts, the subtraction of all the longs, it just, that's a trend at this point. That's not a daily, that's not a weekly fluke. That's an actual trend. So I'm just being cautious with it. That's why I bring that up. But if we're just looking at the technicals also, we don't have the trend 100% in our favor just yet. The 80 MA I guess it is actually ahead now. So an aggressive buy would be this zone I already drew up over here. We just missed it. We just missed it on Friday by like a couple pipettes, guys. That was this trend right, or this demand zone right here I was watching that broke structure. So that's still there. I'm going to leave the alert there. And as you can see, my projection line right there, it is still of interest. And I may even still buy that, guys. I just won't be putting in a full risk. I'll definitely be taking off some risk. So that is CAD yen. And if we go back over here, remember pound Aussie is really the only thing I see on the list where we're buying a strong currency, selling a weak one, because all these currencies are giving us relative economic overperformance if we're just looking at the 8 majors, because the dollar is all of a sudden the second from the last, and it's still at 60%. The pound is as well. Euro, I mean, look at that. Those are some high beat rates. So that's economic overperformance. But again, the only one that's really given us the bearish vibe, in my opinion, is the Australia dollar. So that's automatically going to be probably my favorite pair to match up just because of the strength versus weakness aspect. So pound Aussie, let's go look at that on the chart. Very nice uptrend. Higher highs, higher lows. 80 EMA is pointing north, running away from the 21 EMA. I like it. Also have some VWAP that I put on this swing low down here, the anchored VWAP. So far, it is actually looking pretty good, I got to say. Hey, I want to see that VWAP, preferably on the, well, either one, I guess it doesn't matter. The 4 hour. Yeah, I want to see that VWAP going through the zone. Okay. I want it to continue like that. Paint it red like the rest of it. That way, when price comes back into the zone, if and when it does, I want it to pierce it. Now, that's the 4 hour. While on the 1 hour, it's already going to pierce the 200. In fact, it's already touched it. So it may have caught a small zone over here already. Very well could be the move. Who knows? But if it comes down a little deeper, that's why I'm waiting on this zone down here. I just like I like the volume. I like the fact that's an impulse move, bullish impulse move. We broke structure. And that I think is the best spot for where the liquidity started bouncing in. Because remember, it didn't bounce in down here. It bounced in on this kind of first base rally. So in that first base all the way up. So that's going to be my personal number one play going into this, at least the early part of the week. And then we'll see how that US dollar data kind of comes out and unfolds. But I think that's my favorite one, guys. As always, not financial advice. It's just what I'll be looking for. I think I could justify that. It is higher on the curve overall when you look at some of these higher time frames, for sure. But I'm looking at it a little more so on the lower time frame because, well, I like the separation between the strong pound, the weak Aussie. So that's probably going to be my favorite, guys. Absolute favorite. Go back to the top setups over here. Pound yen is on the list. That's a +7. Let's have a look at that. This is on my list, but not as favorite as pound Aussie because the yen is strong too. They're both strong currencies. Okay. Again, I don't prefer to trade two strong currencies. It's asking me to buy the pound at 60% beat rate, but sell the yen, which is an 83% beat rate. That just doesn't jive very well in my head, like the pound Aussie does, right? So, but nevertheless, the technicals look pretty good, though. I do have to give it that. Looks like we're trying to form a head and shoulders pattern up here, are we not? So break the neckline, drop in, give us our 1-to-1 push down. What is that? I guess this would technically be the, let's see, 159 pips. Okay, the bottom of this daily is basically where when you're doing head and shoulders patterns, basically the neckline to the top of the head, if that's 1 unit, well, just measure 1 unit opposite that. So that's why I took it down from the bottom of the neckline there. For all those head and shoulders pattern traders out there, the 1-to-1 is basically at the bottom end of this demand zone, which if I were buying into this, I'd be putting my stop loss below the daily anyway. So that would incorporate that 1-to-1 look as far as, stop loss, my protective stop. But I've got my alert set at the 4-hour demand, which is the top of the daily. So that's the look I want to see coming out of this thing. It'd be nice to see it kind of slow down a little bit just prior to bouncing in. So maybe we can get some type of little bit of basing, a little bit of consolidation, a little bit of expansion legs down, expansion leg up, start getting that manipulation game happening, which is accumulation for the banks because they have to accumulate their positions, right? And then just give me that one final spring downwards into the 200, and hey, that could be a good looking play too. But I'm asking it to do a lot. I'm asking it to do a lot, so that is a possibility on the technical side. Again, I'm just not too excited about selling a strong currency like the yen right now. It's just kind of tough to do. So anyway. Let's see. We did gold. We did these bullish items. Oh yeah, pound dollar. Again, that one's bullish now. So let's go see what it's showing us at the top here. Pound dollar forever was bearish. All the dollar pairs were bullish, which means bearish pound dollar. So as far as the trend, I don't know. Okay, so we have kind of flipped around. The 8 EMA is now above the 21, so that's good. We did break through this supply. So we broke a structure. That's good. And I've pretty well already drawn it up here, but I would prefer that we get a close up here, guys. It's one thing just to break structure like we did. It's another thing to close. The close is really what confirms that, hey, we've got a little bit of potential reversal going on. I just don't personally like just a break and then only for price to just get sucked back downwards. I don't like that. Even on the 4-hour over here, you can see we still just barely wicked through it, but we didn't close a body. And I'm sure if you go down to a 1 hour, 30-minute, we might have, but I'm more interested in the higher time frame. So I still need to see this break and close above. I mean, I have to. For me to get excited about it. If it bounces into this demand zone now, not interested. Because that's a daily and probably a 2-hour confluence. While this one here is only a 4-hour. So I've already got a daily fighting my 4-hour, not interested. Got to get a close first. If we get a close, if price reverses now and goes back and gives me my close above, then I'll be interested in this retracement right here. If we do not get this break and close, well, there's one deeper down here I'm interested in. And the gamble is, or the risk is that enough of a retracement to exhaust the selling before bouncing into demand for buys to the other side? So that would be this picture here. Okay. If we do end up breaking down to this level and we remain at a bullish, pound dollar long, then I would want to probably prefer to see the U.S. data come out negative. Not that I want to go against my own economy, but I'm just saying, if I were to be wanting to buy pound dollar, yeah, I want to see that CPI number come in, miss. I want to see the PPI come in a miss, but I won't bet on it. If it just so happens to do it, that'll go a lot further into helping me with that buying decision. But as it stands right now, sitting on my hands with that position there. Okay, guys, I got 2 minutes left. Let me see here. EuroCAD. Let's see here. Yeah, EuroCAD. So buying the Canada dollar, which is what the big banks just sold off. We'll still take a look. EuroCAD. I don't think I looked at that one yet. We'll probably finish it on this. We have got the ADMA is still above 21, so not quite there. I need to see this break below this structure and close, and then look for possible retracements to supply if I am to have any interest in shorting this, guys. We kind of already have a zone that's formed, supply zone right here. So I could definitely probably use this as an entry if I could get my box up there. Yeah. Supply zone right there, guys. Got one. No real daily to speak of, so it's just the 4 hour. But if you can see higher up, now we're starting to get the moving averages out of whack if we retrace up here, but that's the first daily zone I see. And then within the daily, I think we got a pretty decent looking 4 hour. Yeah. A lot of candles, but we would have a 4 hour right here for our confluence play. Closest to the highest point there of the curve. So premium zone. But I prefer, guys, first to see a breakdown of this swing low right here, and then we'll worry about which zone we want to tackle at that point. But no play on it unless we break and close. So that's all I need to see. I need to see a couple breakdowns and closes of some of these assets. I need to see what the CPI comes out to tomorrow, the PPI on Wednesday, the retail sales to a lesser extent on Thursday. It is more of a medium impact event for this one anyway. But ladies and gents, I think that's about all I got. Silver, let me take a quick look at silver. It's going to be right there with gold. So no play. It is neutral, but there is a zone up here. This is still continues to be a strong downtrend right there along with gold. Yeah, it's as neutral gets. I know that's not a sexy answer, guys, but when the fundamentals are not in our favor, I don't even waste my time nor my breath looking at it for the most part, because gold is 0. And then silver, I think it was wherever silver's at, -3. So it's the closest to a reading. So again, if we get negative US data, if we get negative CPI and possibly that negative PPI the day after, silver might possibly go onto the bearish list because the trend is already there. And we just need a few points of did I say that backwards? I'm sorry. We need the dollar data to be, you know what? It's not even going to help silver because remember, we just saw 2 of those 3 data sets were already bullish on the previous. So even if they're bullish today, it's not going to change the percentages. It might change it on the one, but not enough. Probably not enough to get us down to a bearish reading. So yeah, I mean, that would be what we would obviously want to see. Strong US data for silver. Sorry, I said that backwards a second ago. But you're just not getting a whole lot of help from the sentiment side of things. Trend looks good. Data looks okay, but it's just not enough to swing it bearish for silver. So, yeah, sitting on my hands with gold and silver. Ladies and gents, I'm out of time. Have a wonderful day today. And tomorrow should be a lot more exciting than today. We'll just get the data and we'll kind of reevaluate from there. Cuss and discuss and have a good old time. So, ladies and gentlemen, take care. Talk to you tomorrow.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.